anyway, appreciate y'all being here, and of course, when I start talking, I love this stuff, the next couple of subjects I'm going to talk about, but there's no way to make it entertaining, and so a lot of times, by the time I get done, everybody's going to feel like they've been beat with 2x4s. I apologize, but there's no really good way to dress it up, so. But it is good information, and hopefully it will be relevant to your work and stuff. And I want to start off, though, by talking about a lot of times when folks ask us about things like cost reasonableness or allowability and stuff, they come and they want us to say, yes, that's allowable, or no, it's not. And the thing that we try to make folks understand is that there's context involved in it. So sometimes something might be allowable, and sometimes it won't be. So what we talk about in saying, instead of saying yes or no, what we tend to do is say, well, here's what would make it allowable, or here's what would make it not allowable. And so you have to fit your circumstances into that, and you've got to do it, accurately, because I told you guys, I worked in universities with PhDs for like 20 years, and when you told them the rules, the first thing they wanted to do was figure out how to get around it. And so when you do the assessment for whatever cost, it's got to be accurate. The answers have to be accurate, otherwise the result isn't. So anyway, talking about allowable cost and cost principles is under 2 CFR 200, subpart E. We also have the other regulations under 24 CFR 570, 58, and also when we have federal registers come out, sometimes they will have some rules that are different than what we normally have to follow. Now, what we generally do is when we get a federal register, we comb through it quickly and see if there's any disconnect between what the circulars have in place and what is putting out. And generally we don't see a lot of that, but sometimes we will, and we'll let you know about that in our policies. Except for in situations that might be set out in a federal register or so that changes, for costs to be allowable under our funding, it has to be necessary and reasonable for the performance of the grant, allocable to the grant, and conform to any limitations, which means that if there's something in the cost principles that were limited, or if there's a policy, specific policy or regulation that would be allowable. So, has to be consistent with policies and procedures. They have to apply uniformly. They have to be authorized by us in the budget, meaning that a cost could be unallowable because we have to put it in the approved budget. Which, when I say approved budget, in our case, we're talking also about the cost summary, because from our perspective, those are kind of the same thing. They have to be also in accordance to GAAP, meaning that they have to follow accounting principles, and accounting principles also have to do with how you do your books or how the municipality does their books. So that could also cause it to be allowable or unallowable. Unless it's specifically set out, that can't be used in another program for cost sharing. It's kind of weird because in CDBG, a lot of times our funds can be used to cost share, which is unusual for federal funding because normally they don't let different programs in the federal money cost share against the other ones. Be adequately documented, and I think Chris talked earlier, and some of our other speakers talked earlier about documentation. And from an auditor's perspective, because that's my background, I can tell you that if it's not documented, it didn't happen. So you have to make sure that it's documented, not just the cost, but you also have to document that it was allowable and related to that rule. So, and then you have the applicable credits. We'll talk about applicable credits in a little bit, but basically that means that if you get a refund on something that the grant is paid for, then you've got to credit that against the grant. You can't use that money and put it in the general revenue and then keep it as like a so, the other standard is the prudent business person standard, and the prudent business person standard for reasonableness says that the cost doesn't exceed what would be incurred by a prudent business person under like circumstances at the time the decision was made to incur the cost, and also somewhat in the sense of where it was incurred, because especially in these times of inflation, we've seen situations where one part of the state, a cost might be, substantially different, or materially different than other parts because of the inflation and how costs or how inventory rolls and stuff like that. So, anyway, free business person, standard, what you would pay in an arm's length transaction. Also, if it's ordinary and necessary for the operation of the subrecipient for the proper and efficient performance of the grant, meaning that you didn't buy anything extra that you're actually not going to use. Later we'll talk about this in the financial side of the fraud, waste, and abuse, but we don't want to see situations where an item is purchased, it's really not going to be used for the grant, but you buy it during the grant, and then the grant is over with, and the item's still there, oops, we can use it for general. The restraints on the requirements imposed by the factors, sound business practices, arm's length bargaining, conflict of interest, and other regulations and terms and conditions of the grant. I want to stop for a second and talk about conflict of interest too, because remember, the conflict of interest is not a no. Conflict of interest is tenable, you either manage it, mitigate it, or eliminate it. Eliminating it is the third option, and it's the worst. But you've got the other two where you try to find a way for it to work out, and a lot of times that's documentation, or sometimes that's additional supervision that allows that to happen. Making sure that the market prices for the same goods or comparable goods in the same geographic area and at the same time period are similar. Whether the contractor, administrator, consultant act as due prudence under circumstances considering the subrecipient, its employees, DED, the public at large, and also the federal government. So as you can see this list when it comes to reasonableness, like we're trying to find every angle that we've probably seen come at us in the past, where folks have purchased things in a manner that they probably shouldn't. Last thing, of course, is whether you significantly deviate from your established practices and policies regarding the occurrence of costs, which may be unnecessary and justifiably increase the cost of the award. Cost is allocable to a grant if you can easily determine its benefit to the grant compared to the cost. And so when we look at situations where the costs are shared, sometimes they're shared across grants, sometimes they're shared between unrestricted activity, which would be your normal everyday, and let's just say that you have a grant and so you work 10% of your day on the grant, or you work 1 day a week on the grant, 20%. So you have some reasonable basis to determine it. And why that's important is we'll talk a little bit about the difference between indirect costs and direct costs. Because indirect costs, you have to be able to, are costs that are for things that you can't readily determine the allocability on it. For example, your lights and your water, and if you pay rent, that type of thing. And so it's important that we keep in mind those things that can be easily divided and shared across activities, and those that can't be. So when we look at allocability, one of the things that we have seen in the past has been better in the last couple of years is like if somebody had 2 grants, then they would take a cost and they would divide it 50-50. Which sounds somewhat reasonable, but the reality is what the government expects is that it's prorated, and it's based on the cost of each of those, or the expenses going to happen for each. So in this case, we've got an invoice for 65 grants, 65.5. The first grant's 500,000. The second grant is for 750,000, which means you got a total grant of 1,250,000. The 500,000 is actually 40% of the cost, and the 750 is actually 60% of the cost. And so we're going to make the allocation to the grants then of the $65,000 invoice. The grant one would be 26,000, and grant two would be 39. So it's rather than have 50-50, you split it up by how it's allocated based on the percentage each grant is of your total grants. Does that make sense to everybody? And so, like, if you had 3 grants, you couldn't just split it up 3 ways. It would have to be how much each grant is, what the total is, and take the percent of each of those, and then you come back to the total grant or total cost. And again, not 50-50, it's the 60-40. Also, for allocability, the cost has to be specifically incurred for the grant. The benefits to the grant and the subrecipient and the cost can be distributed proportionally using a reasonable method. It's necessary for the overall operation of the subrecipient as assignable in accordance with other cost principles under Part 2. It has to be authorized by the grantee, and again, we authorize the costs based on the cost summary or the approved budget, right? So that's why we're really persnickety when it comes to your cost summaries. And you've seen too in the last few years, we're kind of persnickety about the per cars, which is that we just can't have a construction number for $1 million. When you have the construction for $1 million, we need to see the line items. And in that, we're looking for unallowable costs or costs of the kind of one of these things. There's 4 bases that we can disallow costs. One is unallowable under the cost principles. The second is that it's unapproved. Third, that it's unreasonable. Fourth, it's not supported by adequate documentation. Reasonableness for reconstruction, rehab. This has to do with, at what point does it not make sense to rehab in this case, maybe a house or a apartment building or some sort of building project. At what point does it doesn't make sense to, if you put $1 million into it and then the value of it afterward is going to be $750,000, then that's not going to make it reasonable for us or for the government money. And so at this point, we're looking at 50% of the fair market value of the finished property. We would want to look at that and say, well, does it really make sense to rehab this, or would it be better to come up with another alternative? Does that make sense? In addition, the purchase price of a home may be deemed reasonable if the lender's appraisal supports the purchase price, and internal comparable analysis supports the purchase price. The costs have been reviewed by an independently estimated by an appraiser, or if the work has been competitively procured. And the competitive procurement, this is one of the real foundations of what we use in our federal money. And this is why it's so important whenever we look at, Chris was talking earlier about procurement, and we're looking for 3 bids. The reason why we're looking for that is because we feel like at that point that because of competition, we're going to get the best price and the best outcome on it because they're competing against each other. And conversely, whenever you get in a situation where you only have one bid return or one person that's been solicited, and we don't know that number is very good. We compare it. We saw this too with our when we were doing our broadband. And in some parts of the state, it was like $36,000 linear mile. And in other parts of the state, it was like $450,000 for a linear mile. Now, which one do you think had the competition, and which one didn't have competition? You know, the 450 was like the only person in that area that was going to do that type of work. So, okay, so that's all we have for cost reasonableness and allowability. A little bit about allowability. Anybody have any questions about that? I know some of you, this is like the fourth time you heard it from me, so it probably getting old. But, you know, it's like advertising. You got to repeat stuff like 3 times before it sticks, right? So, you'll hear it sometimes.